Okay, welcome to my live stream, safe real live stream, where I share my real P&L on 3 accounts and teach my proprietary safe wheel options trade system for free. And the system is currently up about 25% year to date. Please type in the chat that you can hear me okay. I'm going to assume sound is good. Okay, good. Thank you. Also, be sure to post any questions you might have. I see one question already. I want to make sure you guys get all your questions in before I end the broadcast. Okay, let's get started here. Let's go with the earnings edge. What happened last week? Well, you can see that the account value is the same as it was a week ago, which means that I did not trade anything because there was not a stock that fit through all 8 filters. I did have a possible trade in, but it just did not come down and meet my price that I wanted to get in at. I wanted to be a little more patient. So that's not really significant. Really, what's significant is that there was no trade last week, and you can see the overall profit and losses is $3. But when you take commissions into account, you can see that the account went from 5,000 down to 3,582, down about 28% year to date. So what that means is the system itself is at break even, but the commissions have cost me about 28%. So that is a little bit of a tell about this system, that the commissions are pretty high with the earnings edge. But with this system, I did change the exit criteria. So the numbers are now that I'll win half and lose half of the trades, but my average loss will be around $200 and my average win will be plus $500 based on the back test. And that's based on using the entries, the real entries that I used for 2022 so far. Okay, let's get into the Premier Level 5. This is the top system that I have. Let's see here. This system here is the one that I recommend when you want to get more conservative. If you have a significant amount of money, I would call significant $30,000. And what's good about this is it's truly diversified. True diversification is hard to come by because when a market crashes, all stocks become correlated, even gold, everything becomes correlated because everybody's got to get out. You got to get to that exit door at the same time, and there's no liquidity. Everything goes down except volatility. So you want to be long volatility. That's what gives you true diversification. And that's what the Premier Level 5 does. And it's also diversified in the other market's a grind down market, in a sideways market, in a bull market. It'll make money in all those markets. Okay, so it's truly diversified. Now on this, we had a couple closes last week on this particular account. So they were both winners. So now my record is 10 wins, 2 losses, and 3 ties or 3 break evens. And currently I have 2 open trades. And this has all been since April 8th, 2022. And since then, this particular system has been down maybe 3 to 4%, and is currently up about 8.5%. You can see that I'm at 32,560,648. So 32,600, and I started with 30,000 on April 8th and had about a 4% drawdown since then. So up 8.5%. The S&P during that time frame has been as low as 22% and is currently down about 16% since April 8th. So you can see we're vastly outperforming. Alpha there is what, 23% alpha. And then as far as the drawdowns, maybe 1/5 the drawdown. So the beta is extremely low. So the beta of 1 would be equal to the amount of volatility of the S&P 500. We have 1/5 the volatility and we're outperforming. So that's pretty significant. Okay, and of course I have a link in the description for both of these systems. both the Earnings Edge and the Premier Level 5. Okay, let's get into the safe wheel. Let's see here. All right, we're dealing with Uber. I like Uber. Last week, we were going into earnings, and I sold a put. I got a lot of premium for that put, but then I bought a little $5 call. So, so my call wasn't really very protective over my put. I know that Will mentioned that he takes about 20% of his premium and buys the call. That probably worked out a lot better than what I did just buying that little $5 call. I kind of like that idea. So he probably it came out much better than me. You can see that last week I did not make money with this, but I'm still up with Uber. But last week going in, sold a put, did not get assigned, had that long call, did not use the long call, didn't go up high enough to hit my call. And so I'm back at square one. So at this point, I could literally start over. Like I could get out of Uber and get into a different stock if I wanted to. And by the way, I don't know if I mentioned this particular system is up 25% year to date. I think the drawdowns have been relatively low. I haven't really run those numbers. I think they're less than 5% from peak to trough. So again, outperforming the S&P, that's my goal. And you can see the net liquidation here. This is something you will not see with any other YouTube instructors. They do not show their net liquidation, and there's a reason for that. And I think we all know what that reason is. And if you don't know, go ahead and ask me in the comments. So what do I do next? I can either, with Uber, start over, use a totally different stock, or I could continue with Uber and I could make sure that my put hedge is in the proper location. So it's got to be within 70% of the price of Uber, 28.27 times 70%. So it's got to be at least around 20, or I like it to be up to 80%. Uber is 28 times 80%, so 22.5. It's right there, 22.5. It's right at 80%. So if I were to just start over with Uber, this is the put hedge that I would use, and I would do it around 150 days. But this is still good. It's still solid. If this gets to about 100 days, then I start talking about getting rid of it, replacing it, or moving on with a different stock. So this put hedge is still good. I still like Uber. Uber is trading around $30. I like it. I'm going to continue with Uber. So let's start this wheel over, like the traditional wheel strategy, because we have our hedge. Now we can do the traditional wheel, which is to sell a put. And let's get into that. I'm going to do that. Uber. I'm going to use this expiration cycle here for the safe wheel, the nearest one that expires on Friday. I'm going to go to the puts, and I'm going to go out of the money. So 28.25. So 27.50 is out of the money. I can go anywhere I want here as long as I get over $28. So right here down to the 26.50. I could use. I can go to 27. I can go to 27.50. I'm going to go to the 27, just in between there. So there's good premium here with Uber. You can see the implied volatility is at 77. So it's pretty good. It's right where we want it to be. I'm going to go with the $27. Gives me a little more protection. So I'm going to sell. I'm going to do one of those. Why one? Well, that's the sizing. I'm between $5,000 and $10,000 in my account. So I'm going to do one of these and three of the put hedges. So mid price 41. Sell one put. Okay. Filled there. Now we'll do something a little different than the traditional wheel, and that is I'm going to buy a call because I need to protect my put hedge. So if the market goes up really, really high, my put hedge is really going to lose a lot of value. So I'm going to buy. This is interesting. A quick look at the volatility. There's something going on here with Uber because there's some type of an event going on, because this is pretty high. This implied volatility is pretty high compared to the rest of the implied volatility. And I thought we did have earnings last week. So anyways, I'm going to buy a little $5 call right here, the 32.50. Now, like Will did last week, which was a pretty good idea, maybe I sell this 27.50, collect, 56 cents and take 10 cents or 15 cents of that and buy something a little closer up in here. Not a bad idea, not a bad strategy to do it that way. Okay, but this one right here, probably wouldn't get it for $6, so I'm going to go here for 5. I'm going to buy one call at the 32.50, protect my hedge. Okay, so now I have my wheel on. So I collected around 35 bucks for this week, and I'm pretty well hedged. And pretty simple to do, doesn't take very long. If I wasn't on a live stream, it would take me 3 minutes for the week. Okay, also I wanted to say before I forget, hit the like and subscribe button. And if some people don't get this, they ask me, where is your live stream, your latest live stream? Because they didn't hit the notification bell. So you want to get notified whenever this comes out, and that'll help out a lot in terms of being able to, not, even if you're not here for the live stream, you'll at least get access to it later. If you don't have hit the notification bell, it's kind of harder to find it for some reason. Maybe it shows up a day later. Okay, so let's get into questions. If the overall position is, this is from Anonymous, if the overall position is in a loss and the stock price is closer to 37, would you choose another stock over rolling up the put hedge? I would probably start over, because you're getting closer to the $40 range. Unless I really like the stock. Like I seem to like Uber. I like Macy's. I might stick with it. But if I had to make a black and white decision, I would get out and start over, get closer to $30. Brad, do you think it was worth trading on earnings week with the safe wheel? Since we lost like 3/5 of our profits, should we just skip earnings week? Yeah, so that's again going back to we should have bought a hedge that was closer, because we have all that extra premium. We should have used some of it to buy a hedge that was a call that was closer to the money. It would have been worth doing that. Maybe Will. Okay, so Will says it was still bad for him, but no, I wouldn't skip and lose out on all that premium. Plus, you don't want to add all these rules and make it so complicated. But I could have bought a call closer, and covered that hedge a little better. But let's look at Uber overall. Let's see if I can get here quickly. Profits. Uber. I'm still up 153 bucks on Uber, so I'm not complaining about, what happened last week. I'm not worried about, I'm still up 25% year to date. I'm not worried about what happened. I get over that kind of stuff really. I don't even think about it. Like, it's done. It's over. Will, it was bad for me. Still a loss last week. That sharp rise after earnings hit the 3 puts hard. Still doing good on Uber overall. Okay, so I guess you weren't able to cash out on your call. So you paid a little extra for your call, but you did not cash out on it. So it didn't protect the hedge. Albert, hi, how are you? Doing well. Doing well. Let's see. Alex, do you think the cost of the put hedge relative to the credit received from the call is something to consider? The credit received from the call. You mean how much I would pay for the call? A little confused about that. Uh, Yeah, I'm not sure what you mean by the credit received from the call. You mean probably the amount paid for the call? So the cost of the put hedge relative. So no, I wouldn't use the cost of the put hedge as any type of trigger. I would use more of the premium that I sold as some type of gauge as to how much I would pay for that call. But I see that our put hedge depreciated quite an amount. Yes. Well, I don't remember how much we paid for it, but yeah, I mean the put hedge during that particular time frame, because we were coming into earnings, it was probably at a higher. It went up at a higher value during that week, like everything else. So if you're comparing it to what it was last week, yeah, I'm sure that it came down quite a bit. Oh, there it is. Well, there's elections and news on Meta laying off people, Lyft and Uber. Ooh, Uber might lay off people as well. See, I don't. That doesn't matter. And there's elections. Maybe that's what the volatility is. Probably. That's probably why the volatility is higher this week. But it doesn't really matter. You can see we just keep rolling through the system, and sometimes it works in our favor when there's high volatility, and sometimes it doesn't. But we just, we continue to trade. SQC63 we built. Thank you. You're welcome. Jerry, on the level 5, the Premier level 5 or the PL5, I see that you had a few years where the system was flat or slightly negative. What was your largest drawdown? Oh man, I got to remember that. I should have that off the top of my head. I don't remember what it was, but it wasn't significant. Just off the top of my head, I would say maybe 10 or 12%. And those lean years, you're probably talking about like maybe 2013 or 2017 when there was no volatility. And so when there's very, very little volatility, the system doesn't lose money per se, but it just doesn't make a lot of money. Thanks for the education you're providing here. You are welcome. I appreciate that. I have all this information in my head, and it's something that comes to me easily. So it's nice to be able to share something that you feel is of value, and you can help other people with it. Okay. So I do not see any more questions. So let's go with this. If the P&L is not real, what else are they trying to conceal? I'll be back next week.